Good morning, everybody. It's Steve Bates here with Dan Mahoney of Polar Capital. Thank you very much for joining us for this BIA webinar on reflections from JP Morgan. I apologise for being a few minutes late. The reason for this is I've been with a Minister of Health this morning, and I'm delighted to say there was good reason to be late. The government is announcing today that there's going to be a new regulatory step in an early access program, which is the promising innovation medicine designation, which is going to be the UK equivalent of breakthrough designation. So it was a meeting that was worth hanging around for, and more on that in the coming hours. But I hope you realise that's why I'm late, and forgive me for being slightly out of breath, as I've done the jog between the Houses of Parliament and the BIA's offices, which, for those of you who know Westminster will know, it's not something that somebody of my age should struggle with, but somebody in my unfit state is struggling with. I thought what we could do today is start with a few thoughts from my thoughts on JP Morgan, and then I'll go to Dan for his expert analysis as someone who's a veteran, unlike me, who's only been for the first time. And then, if it's okay, I think we throw it open for discussion and see where people are at. So I hope that makes sense. So, don't mind, just a few very quick thoughts on JP Morgan 2014. I think my analysis is that it's no longer just a pharma biotech event. I mean, the world there is very much a healthcare world, lots of talk of Obamacare and the insurance models that are being used globally, much discussion of digital health and the importance of data and analytics, which I don't think is a surprise to anybody in BIA membership. It was interesting to see pharma embracing the new innovative startup, and the build to buy a structured deal concept is here to stay. I think what we'd call asset-based models are something that were still being talked about. It wasn't something that had gone away. Certainly there was talk of that. And hot areas were immuno-oncology and particularly RNA therapeutics from my perspective. And lots of people were engaged in JPM without being there, not simply within the conference itself, but at a particular hotel in the centre of San Francisco. But I think there was just a social media engagement of over 10,000 tweets on their official hashtag. I hope gave people a sense who weren't able to travel to San Francisco what was going on. And I think their website is fairly comprehensive in terms of the things that you can see in terms of presentation, although you don't get the Q&A. It was great also from my perspective to be able to host the reception on the Wednesday night with AstraZeneca and Medimmune, and it was good of them to provide us with a beef eater, which many people enjoyed, and perhaps there's some people on the call here remember the evening, and I hope made great use of the 750 people event where lots of BIA members got to network not only with AstraZeneca and Medimmune executives, but also investors and others who came to it as the party of choice. So I hope that was a benefit to members as well as an enjoyable evening. A couple of thoughts from my perspective that I think were the backdrop from JP Morgan. This year, if you look at the last year, if you look at the BioCentury London index of biotech companies, the index last year was up 62%, and I think if you look at what the Nasdaq biotech index also did, going stellar last year, and I think that was in the background of investors' mind, that they realised that this was something that was going very well. And I suppose the question as we went into it was this sustainable? And perhaps we can have some reflections on that in a minute. But I think this is driven by fundamentals as well as people coming back into the market after many years. And perhaps the other thing that people were asking the questions on, and this is just really a data point to enable the discussion, is if you look at the number of initial public offerings in the US in the last 5 years, obviously last year was a stellar year with 47 IPOs, but if you look at that in terms of the market capitalization they were able to deliver, actually, in fact, that was less than it has been in second in the all-time highs, only 3.6 billion as opposed to 5 billion in the year 2000. So perhaps there's something here about them being the right IPOs rather than it being the bubble that I think we saw at the turn of the millennium. But again, one that we can discuss as we go forward. I think that's probably as far as I'll go with the slides, and perhaps what I can do now is turn to Dan, who is joining me now. I'm just going to go unseasonably close to you, Dan, but the people can see you there. Well, I take it that you've been to JPM a few more times than me, because this was your first visit, I take it.
Yeah, well, so obviously I've been in Poland now for 7 years, so I've done the last 7 years, but I did actually go a couple of times in the 90s, so when I was actually working in California. So I think your interesting comment is this started really as a biotech conference 30 odd years ago, really. It started obviously with HCQ, no longer exists, but it's a lot bigger than that now. And I think that whatever numbers you see, they're probably, the attendance of the actual conference itself felt a little bit down. They were generous, I think. But there might have been, say, 5,000 people at the conference, but there'll probably be another 15,000 in peripheral meetings. And I think it's now become the conference in healthcare for business development. We see it more as a networking conference and a conference really than a standard investor conference. And I think that's true for most of the companies as well.
You obviously know the financing environment well. What's your take on it from this year?
Well, I think one of the things we were worried about going into the beginning of this year, as you've mentioned, there's a lot of IPOs. And I think there's the buy side is a little bit overloaded. We've probably looked at 30 of those IPOs. We haven't participated in all of them. And there's a limit how much can be consumed, I think. And we were a little bit worried that sort of we'd see the air come out of the sector. I actually think that so there's been a lot of talk about having got a biotech bubble, etc. I actually don't think we've got a biotech bubble. I think when I think back to, I've participated in nearly all of those big peaks actually in some shape or form in different guises. I think if we go back to 1999, 2000, I think that was at the same time when tech was booming. It was really based on concepts. You know, this idea that genomics was going to change platforms, was going to change the world. We discovered all these great new drugs, etc. Without a realization that it was going to take a period of time. Whereas if you look today, I think what's caused the excitement in biotech, and if you look at the companies that are IPOing, and I know there are exceptions, but by and large, you do need some phase 2 data. You know, there are actually compounds there. And the things that have driven the sector are sort of advances that are being in various things like hepatitis C, various cancer applications, various liver diseases. These things are real. And so the way I would phrase it in sort of cycling terms is it feels a little bit like the peloton on the stage of the Tour de France, and it's just beginning to motor. And you're going to have some stragglers who fall off the back, and presumably there's some people who will get ahead. But I don't feel as though this is something that's just hot air. I think there's some momentum behind it. And I think, to put it in context, that slide, I don't know if it's on the screen, but the slide that you've got there that shows the amount of fundraising, I think if you think of $5 billion back in 2000, that was, remember that was IPO, if I remember correctly, it was about another $25–30 billion in secondary. I think it was about $37 billion was raised that year. That would have been well in excess of 10% of market cap of the entire global sector. You put $3.6 billion in context, the sector today is about $500 or $600 billion. So it's not actually that much to consume. I think you need to think about it. The sector has really matured over the last 15 years, and I think that's something to bear in mind. We should be able to have an IPO, I don't like the word IPO windows, but there should be, say, $2 to $3 billion of IPOs a year every year. I know that's not going to happen, but a sector that's $600 billion should be able to actually swallow that amount of new capital.
Wonderful. How do you see the operating environment?
So I think that one of the things I got from the pharma presentation is that I think pharma seems to be a lot more confident in its innovation right now. We think our view is that we're in a new wave of drug development, and that's being driven by the biotech sector. And I think it's interesting that if I go back to 3–4 years ago, when a lot of the farmers were talking about sort of capital efficiency, cost cutting, etc., they weren't really, maybe in some meetings, but certainly in investor meetings, no one was standing there telling them about their great new immuno-oncology pipelines or anything like that. Whereas today, I think they're a lot more confident to talk about innovation and trying to focus investors on innovation, which kind of means they think there's something there. But at the same time, you listen to someone like Glaxo or Astra or any of the other big guys, they're talking about 50% of their pipeline coming from external sources. So I think that's good for biotech companies. The other thing you're seeing is, as R&D is plateauing as percentage of sales for the pharma sector, which happened over the last 3 or 4 years, I think you're going to see more. Obviously, early discovery seems to be de-emphasized to some degree of phenomena, but it's still trying to access that through partnerships, licensing deals, whatever it may be, with smaller companies. So I think the operating environment for the smaller companies, I think, continues to be quite robust if you can get in touch with that people.
Thank you. A couple more for you, and then I'll go right open to the floor if people are keen to get in with questions. What do you make of the business environment, particularly for the discussion around payers?
So I sat through a lot of insurance and hospital stuff as well. So I think something that a lot of the big med techs talk about, and some of the farms talk about, is the concept of value. And they're beginning to think more about cost effectiveness. Obviously, we're very aware of that with NICE in the UK and the IPOs in Germany. I think when I think of US biotech investors, they don't really give a hoot about how much the drug costs. They think that you can charge $50,000 for a hepatitis C drug and it's going to be a $300 market. Everybody's just going to open their pocketbook. I think pharma companies are a little bit more aware of that. Pricing is something that we are worried about on a mid to long-term basis, and I think some people are beginning to address that or think about that now, because that's going to need to fix that problem before it becomes a problem.
Now, it feels like a discussion played in my days in Jim's line when I was there going over saying, this nice thing, it's likely to appear in America sometime soon, and there were some interesting discussions a few years ago. Emerging markets has been a theme over the last few years. How was that running at the conference?
So I think the thing I found most impressive was a presentation by Samsung Biologics, who I think by 2018 will have some like 30 or 40% of the world's capacity of biological manufacturing. So I think that kind of shows you that there's a lot of capital out there, and they can throw it at stuff that I don't know some Samsung is on, but it's not necessarily innovative. Manufacturing, I think, is stuff that people know how to do, and they can throw capital at it. Some of the Indian companies, I think, are doing some really interesting stuff in biosimilars, etc. But I still think that if you look at the cutting edge of innovation, etc., that is the place to be. And I think what I worry about, if I were a smaller company sitting in the UK, is a lot of these guys out in Korea, China, India, they've got access to capital. And we've got to push on what our unique selling proposition is, which is innovation and cutting-edge science. You can't really do what worked yesterday or last year.
Okay. And finally, from me, therapeutic areas, always a question that we get. Anything that you thought stood out this year?
Well, I think obviously liver disease, Intercept and then NAS data. We were quite pleased about that. We owned some Intercept, so we got lucky with that. But I think orphan drugs, I think they're still in favour. Big guys and smaller ones. One of the things that me a little bit is oncology. Largely from a smaller company. Largely because I think it's a more and more expensive place to operate. If you look at the new PD-1 immuno-oncology pipelines that are coming through, there are going to have to be a lot of combination studies. And I think you're seeing the farmers running multiple phase 2s. And I think it's very difficult. If you're a smaller company and you've got enough money just to run one phase 2, you're going to have to be lucky to pick the right one. And I think that's becoming a trickier area. But that said, I think that what we're seeing in terms of this new phase of drug development, I think understanding diseases at the molecular level, etc., isn't just for oncology. I think this will have ramifications in many other disease areas. So I think we're hopeful that in any of these disease areas, if you can make a breakthrough and you can go after unmet medical needs and prove a meaningful difference, i.e. prove value, then I think there's a market for it and people will be interested.
Dan, thanks very much for your perspective. I'm going to throw it open to the floor. Do please unmute and feel free to talk, or if you want to present a question by typing in, if you don't have to use those boxes, we're happy to take some views. But anybody on the line has got a view or perspective. I see we've got some folks on who are there with us. Any comments from the floor?
You don't log in, you just install it. I just put mine.
I take it that Polly's just, we're just hearing a bit of Polly in the background. Is there anybody else who's on who has got a view or a question, or would like to share something, or would like to say do the party again next year, or don't do the party again next year, or you haven't mentioned my company, or any of those types of things.
Hello, can you hear me?
I can.
Hi there. Thank you so much for this morning's webinar. It's really interesting. Unfortunately, I couldn't really hear much of it because there was quite a bit of background noise, but hopefully you can answer some questions. I caught at the start there, sorry, I'm Helen, I'm calling from APM Health Europe. I caught at the start there was interesting announcement following your meeting with the Minister of Health with regards to early access to medicines. Can you expand on this at all? Obviously, we had the Open Europe Fresh Start conference last week, which published a report on improving or amending, what did they say, false clinical trials and EU legislation to benefit the bioscience sector in the UK. Can you expand on what was discussed this morning and where we're going with that?
Sure. Well, first off, apologies if people weren't able to hear. And do please holler. It's very hard for me to know if people can't hear if nobody tells me so. So in future, do please otherwise we just back on. But in terms of this morning's announcement, I was attending an Empower Access to Medicines event, which was addressed by Earl Howe, the Health Minister. And as you know, there's proposals from the UK government there to be an early access scheme for medicine. We have long argued that breakthrough designation has been an important thing in the US. It's driven a number of biotech evaluations and strategies for regulatory approval, and we think there would be advantages to having something similar here. The Minister today said that to use the exact government language, that the early access scheme was at an advanced stage of government active discussion within government, and they expected to make an announcement soon. And he was able to tell us today they also plans to introduce a new designation step, which is called the Promising Innovation Medicine Designation, which would be the equivalent of breakthrough designation, which would then enable candidates to go forward, perhaps through candidate molecules, perhaps in partnership with AHSMs and the centres of excellence already established within the UK. They mentioned Duchenne muscular dystrophy in Newcastle and others in Cambridge to drive uptake in the NHS. So we'll provide more on this, but I hope that that's useful. I hope that provides thoughts. We have a couple of questions coming on the text, so if you can, I'll throw these at Dan. From Glenn, we haven't seen the European IPOs. Do you think private companies, Dan, should head for NASDAQ?
I suppose to come a bit closer. Hopefully, I can be heard now. I think that there's a lot more capital in the US, and I think at the want of not sounding a little unpatriotic, a stock market is just a listing venue, and I think that if you list on NASDAQ, you'll probably access as many specialist investors as in European investors as you would by going onto some European exchange. So if you take an example like Oxford Immunotech, who listed, I think, end of November, early December, we bought shares in that one. I know some other Europeans did, and it got away at a decent valuation and done very well post IPO. Let's hope it continues. So I think that the problem we have in the UK is there's a real lack of liquidity, and there just aren't enough specialist investors over here to keep the companies, if you like, going, or the stocks going, when times are hard. And in some respects, maybe if you look at some of the GW Pharma, you can see what Lombard Medical has announced. Maybe the US is a better place to go if you need to raise capital.
Again, we've had another question here. Similarly, would we suggest going abroad or going to AIM? And I suppose it's a similar thought. If I can provide my perspective, I think there's a degree to which here, as a UK sector, we do need a functioning capital market in the UK for long-term sustainability. And I take it as one of the roles of the BIA is to encourage the City of London in particular to see the opportunity that exists within this sector for the future, partly because obviously there is a tendency for companies to go to where the money is, and that may have a drag for companies if they all list on NASDAQ to go closer to go to the US. So I think there is a long-term need for us to have a sustained market here. But likewise, I'm not going to suggest to anybody who's worked very hard to get their company into a position to IPO that they shouldn't do what's best for their investors, their employees, their companies, and the patients that they hope to serve. And I think, as you say, we've seen, as you say, Dan, we've seen some good results in recent months from people going to NASDAQ. I think our job is to create alternatives to that, and that's one of the tasks that the BIA will be working on this year. Having an event only this week in the City of London, try and encourage more generalist investors who perhaps not looked at our sector for a while, but are intrigued and piqued by some of the companies that have got off in the US recently and some of the numbers they've seen for last year, trying to re-engage them in the sector and see what the opportunity is, because I think there is a bit of a chicken and egg thing here. If there isn't as many people talking about the sector and there isn't coverage of the sector in London, then it's harder for people who have to make a decision today between mining today and retail tomorrow as to whether to look at biotech or medtech with some different technical ways in which companies work, for the ways that they look at a more standard publicly traded stock. So I think there's a job for us here, but at the same time, if you've got an IPO in the next couple of months, I think you can see where my sentiments lie. Any other thoughts from anybody either on the text, which would be very effective? I hope you can hear us, or anybody who needs to unmute and ask a question. Okay, I always count to 7 in my head when I'm doing this to enable people to have the opportunity to hop in. If not, I shall say thank you very much for joining us. I shall just remind people of the future events that BIA has coming up. As you can see, we've got our Next Generation UK Healthcare Investors Showcase this Thursday, Parliament Day, and I hope to see many of you at the gala dinner next Thursday. We're doing a breakfast in London on the 26th of February, Stevenage on the 26th of March, and Nottingham on the 24th of April. And I'm delighted to say that we've got Stephen Minger, the Chief Scientific Officer of GE, talking to us at the inaugural BIA lecture, which will be at Bloomberg in the City of London on the 1st of May, before another breakfast with the BIA in Oxford on the 5th of June. So if any of those work for you, it would be lovely to see you in person, as well as always meeting you virtually through the webinars. Unless there's any more, can I thank you for coming. Remind people this was available for colleagues and others online via the BIA website. And thank Dan very much for making the time to join us today. Thank you all.